Before we dive into the charts discussing Bitcoin and Ethereum, I want to play a clip from last night's GOP debate that I posted on Twitter. It ended up getting a lot of views and a lot of likes because it's a very interesting question and answer that Vivek Ramaswamy had gotten here. So let's play the clip.
Mr. Ramaswamy, you've praised cryptocurrency like Bitcoin as an opt-out from our, quote, broken financial architecture, and you oppose efforts to regulate it. The head of the largest international crypto exchange just pleaded guilty to allowing his platform to launder money for terrorists, including Hamas. You say your cryptocurrency plan will, quote, ensure economic freedom for Americans, end quote. Won't it also ensure economic freedom for fraudsters, criminals, and terrorists?
Look, fraudsters, criminals, and terrorists have been defrauding people for a long time. Our regulations need to catch up with the current moment. The fact that SBF was able to do what he did at FTX shows that whatever they have as the current framework isn't working. And I think it is nothing short of embarrassing that Gary Gensler, the current leader of the SEC, in front of Congress, could not even say whether Ethereum counted as a regulated security or not. And so I think that this is just another example of the administrative state gone too far. Here's the dirty little secret in American politics today. The people who we elect to run the government are not the ones who are even actually running the government. It is the bureaucrats in those three-letter agencies.
After I posted this clip, the comment section was a little bit mixed, but mostly positive. Some people think he danced around the answer. Some people thought he had a fantastic answer. But I think we can all agree that coming from a presidential candidate, this is probably the best you're going to get from, politics or Washington, D.C. I really agree with what he said about Gary Gensler, because Gary Gensler is a flip-flopper. He used to be pro-crypto. He used to actually think that majority of all coins were considered commodities or not considered securities. There's actually video of him saying that.
So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not what would be called securities. Even in the U.S., Canada, and Taiwan, the three jurisdictions that follow something similar to the Howey test, 3/4 of the market is non-securities. It's just a commodity, a cash crypto.
And now Gary Gensler has completely flipped 180 on his stance. And I wonder if it's maybe because he was rejected by Binance after he applied for a job. That's actually a real thing that happened. You can check it out for yourself. Regardless, it is really impressive to see crypto has come this far. It is now mainstream in the mainstream debates, news, talking points. And that alone is a very positive sign. Today I'm using a different setup. This is a green screen setup, testing out something new. I like the fact that you guys can get the entire screen and there's not like a square blocking off your vision from the screen. So let's see how it goes. Bitcoin on the hourly chart, really interesting stuff happening today. Bitcoin's kind of coming down, seeing lower highs and a lower low earlier today. Check out Ethereum and compare it directly to Bitcoin on the hourly. For the most part, we were just following Bitcoin here. Ethereum is the orange line. And now today you can see Ethereum making higher highs on the chart, while Bitcoin is making lower highs on the chart. And if you hop over to the Ethereum Bitcoin pair, obviously Ethereum is still way behind, but today it is starting to see a lot of support, a lot of upside, and we're getting a big bounce on the daily here. So maybe this horizontal support could act as a long-term support and Ethereum can start moving from here. And another post that I saw today that I reacted to with this GIF is a post from Dave the Wave on Twitter. Fantastic account. Definitely go follow him. He said things are starting to get interesting, showing the Ethereum to Bitcoin pair coming up into a long-term consolidation. This is a chart from 2016 to where we are today. You can see higher lows, lower highs, and it's coming up on an inflection point. We are at the pattern completion zone of this long-term consolidation of the Bitcoin Ethereum pair. So maybe we're going to start to see Ethereum finally outperform Bitcoin at least a little bit in this cycle. Usually Ethereum does outperform Bitcoin. So let's see how this plays out. We're going to talk about Bitcoin right after this, but now that we're on the topic of Ethereum, let's just hop over to the chart and pull up the weekly time frame. And you can see that right now we are currently in a zone that is very similar to, well, the last cycle, 2020. When we had the high of 2019, the weekly candle close zone, we broke above that, had about 3 weeks up, few weeks sideways, 1 week down, and retested the breakout zone. And if you fib using the candle close zone to the low, the 1618 was the general target area of this first bounce, where we then actually retested the breakout. So it's kind of like a break, hook, and go for Ethereum here in the last cycle. Now, of course, nothing's guaranteed to be the same, but it's at least worth considering. So if that type of a move was going to play out for Ethereum again, it would look something like this, where we test up to the 1618, just like the last cycle, lining up with a candle body close zone, so market structure here to give some confluence on that fib target, about 2,525 roughly. That is the 1618. A break, hook, and go pattern could be in play, but of course, you never know. Things could be different. Anything can happen. Ethereum could possibly run up to, the second target here, 3,147, 3,150 roughly, before playing out a consolidation. This is also a possibility. Just wanted to throw out a couple scenarios, some targets for you guys to be looking at during this Ethereum breakout. Now, looking at Bitcoin on the weekly chart using the RSI, we can see that we now have a breakout of the 70 level, which in the last cycle, this occurred and we pretty much just went straight to the high with a couple breaks in between. This was the all-time high, 20K, and then we had some resistance at 42, and then we just hit 65. Pretty much, if you're looking at the weekly, it's almost just a straight shot to 65,000 there. The one thing that we are missing is the halving. Now I'm going to pull up my indicator, the Bitcoin halving cycle profit, or you can just search for it. This indicator, pulling it up here, we can see that in most cycles, about 40 to 80 weeks, the 80-week mark is usually the zone where the bear market begins. But 40 to 80 weeks is the general area of highest profitability in most cycles. In the last cycle, this past bull market, it marked sort of like both peaks, the 40th week and the 80th week. You can see we had the halving in 2020 right here, and this run was post-halving. We haven't had the halving yet. So are we going to have this exact type of run right now? Like just go straight through the all-time high to new highs, before the halving? It's hard to say. If I had to take a guess, just based on, probability and the way that things usually play out, I think we might end up hanging out below the all-time high for a little longer, and then maybe we'll see, some consolidation around this zone, and then wait for the halving to really get bullish. Basically, what I'm saying is just slightly more consolidation before breaking the all-time high, right? If you're comparing it directly to this run with the RSI break, I think we may just hang out a little bit more below the all-time high, but that's just a guess. You never know. Maybe demand is way higher than I expect, and we just repeat something like this now. But I would think that maybe a little more sideways is the more likely outcome. And ultimately, that is a parabola, even with that consolidation. It's a pretty parabolic movement, if you ask me. Looking at this 4-hour chart for Bitcoin, there's two scenarios drawn on the screen, and that is scenario one, where we hold 42,500, that previous resistance from just a few days ago, and we go vertical. Scenario one is just vertical, and we just run to 52,000 or 48,500. Scenario two follows the textbook diagram of an ascending broadening wedge, and that would mean that Bitcoin sort of plays out a false breakout, that this would be a false breakout, and we come back below 42,500, create a lower high, and then push down to about 38,000, finding support upon previous resistance. That is bullish, that is constructive price action, right? It's not destructive if you're holding previous resistance as new support. We bounce and then run to the targets up here. So that is the scenario two back test. Those are the current two most likely scenarios, in my opinion, just considering how much momentum we have and how much demand there is. Of course, the third scenario, there's always a third scenario, and that is the bearish scenario, where we just come back to 38 and fail to hold it as support, and we just push down to about 33,500. That is a possibility as well, but we'll talk about that when we get there. Going to CoinGecko here, looking at our top gainers of the day, we can see Optimism is up 21%. This is another altcoin from my Patreon altcoin picks, the public portfolio that I started just a few weeks ago. Arbitrum is also in our portfolio, doing well today. Gala Games is also the portfolio, doing well today. If you guys want to see what other altcoins I'm buying, low caps, mid caps, high caps, join the Patreon below. There's only a few slots left, And we have so many people joining now that I'm gonna have to raise the price to create crowd control because I don't want my Discord to get overwhelmed. But you have a chance now to lock in this price for a lifetime. Click that link below, and I'll see you guys in the next video.